Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we did see a follow through yesterday and the S&P trading into the 3950 level, but it couldn't hold. We started to see quite a bit of selling come in the markets. No real news or anything that really drive it. It's just the market is acting a little bit tired all of a sudden. And yes, I know I put out the thumbnail last night that said S&P to 4,000, and that's still in the cards. We've not seen any trends fail or anything like that, but we are seeing a number of things that are starting to be concerning. Apple is very close to rolling over. So is Tesla. I mentioned this last week. These stocks are getting more vulnerable, and there's no way the S&P is going to be rallying off to 4,000 without Tesla and Apple participating. Now, they're right on key support levels. If you want to know more about what I think about those two symbols, come to the live stream tomorrow. I'll be covering that at 1:30 New York time and many other factors. And last time I focused in on MMT. I've got some other gems for you tomorrow, so make sure you join me at that time. But as we look into Wednesday, we've got a couple things coming out. Retail sales expected to be up plus 0.5, maybe 0.7. And also we're getting the FOMC meeting minutes out. I don't expect a lot from that, but there could be some jewels in there that market participants are going to want to key off of. We'll see how that all plays out. But for the most part, as we come into Wednesday, we're definitely coming into somewhat of a vulnerable state. I still believe if we remain above 3,900 on the S&P, we're going to be okay as far as the underlying trend goes. I'll go through all the technical details here in a few minutes. Now, one of the things that was a bit surprising, it wasn't a huge number, but we're starting to see some short-term selling come into the daily database already, which is somewhat surprising. I thought we might see a further expansion, but this slight little downtick, a flat day, was able to actually trigger more sells than I thought. I'll go through that as well here in a few minutes. As we come into the rest of the week, we're really looking into the claims, continuing claims, and some other minor metrics that come in on Thursday and Friday. But for the most part, we're still going to be dominated by earnings reports, and there's plenty of those coming out in the next two sessions. Let's go ahead and take a look at the charts, see what they're telling us for Wednesday. Before I go into the database tonight, I just want to make a couple comments about what went on yesterday in the markets with the 10-year notes. I won't be covering them tonight. I will cover them in the live stream tomorrow, but we saw a surge up to 1.3%. And one of the things I've been telling you, which does relate to the database, is I was focusing you in on the sectors which are in play now, and financial is one of them. Technology is one of the newer plays. It's still accelerating, and energy. And these are three of the sectors that I focused in on the last couple of nights on the intermediate basis that are very early in the cycle. And we saw the financials up substantially yesterday, and had everything to do with the combination of the surge in yields and what's going on in the yield curve. So this is very significant and is going to continue to drive these sectors, and is likely to keep the markets starting a rotation, which means we may see it back off of the 84% bullish on the intermediate, but it doesn't mean that the trend is ending. It means that there's an evolution or rotation going on within the cycle. As we go to the short-term database, as I mentioned, we had just about 700 sell signals, about 300 buy signals in round numbers. We had a negative rotation on the daily database, moved us down from about 51% to 48.69%. Now, the same metrics will apply right now, is that 42% level will be critical. If we drop below that level, that will tell us we'll have a little more negative rotation. But as I mentioned a minute ago, in the intermediate models, they still have a substantial way to go. And I will go through a lot of detail in the live stream tomorrow. There's just way too much to talk about in this short video tonight. We are seeing some selling, and like I said, a very slight downtick, 0.1 on the S&P. We did not see much selling at all. Many of these trends that we've seen evolve are very fragile, and it looks like we could see a rollover if we get too much weakness over the next couple of days. So we'll be watching, as I'll go through here in a second, the critical levels on the 10-period moving average and others. Beginning with the S&P futures, we have seen an interesting overnight session to the 39.13 level. S2 was 39.07. Also, we have that 10-period moving average that I've been talking about for over a week at 38.98 now. And so this is going to be the major support at that 3900. We can call it a bounce off of S2, but S3, 38.96 would be almost an exact hit off of the 10-period moving average. So we'll see what kind of volatility we get here today. We could extend this down to an S3. Right now we're looking at the high of 39.31. R1 is 39.37. So we may be looking at R1, S2 already printed, maybe an S3. There's likely to be some downside on the market. We have seen the market recover pretty substantially, about 15 handles overnight. Volumes pretty light, 79,000, so not a lot going on, but there was some recovery in the markets. As we look at the SPX, the market grid suggests R1 is 39.39, S1 39.25. We're looking at S3 on the cash, which is 39.08, and then STX 39.01. As we look at the 10-period moving average, it is rising slightly, going to be right at 3,900, and that's going to be your key support. You should be able to trade off of that. I don't expect to see anything roll over at this stage. My only expectation would be a move down maybe to an STX would be an extreme. That would be 38.96. But we should see a bounce off of those levels. The PPMs have, PPM1 has turned down a little bit, but is still a plus 0.41. So very robust trend underlying this market. So there's not a lot of risk on the downside below the numbers I just mentioned. So 3,900 will be the level we'll be watching. Next market I'm covering is the NASDAQ. We're down 9 handles right now. We're seeing some minor weakness. 10-period moving average 13,379, low overnight 13,634. So we're quite a ways off of that number. But we are seeing PPM1 cut through its first and second derivative. PPM1 is up 0.23, PPM2 0.34, and PPM3 at 0.19. So we're in trend mode. PPM2 is going to be the main driver. That's 14,452 is where that major support is. I don't expect we're going to get anywhere near that. Today's probability is for an S2, S3 range be 13,609 to 13,571. On the upside, we're going to be looking at R1, 13,717. I don't see an R2 in tomorrow's action. So look for an R1, S2 on this market. The final market that I'll cover tonight is gold. In gold, I was expecting to see more stability. We did take out the lows of a couple of days ago, and we are challenging the lows that we put in back on February 4th at the 1784 level. We saw a low overnight at 1785, so we're holding that level so far, but PPMs are turning south. We now have PPM1 at a 0.25, PPM2 and 3 are 0.14, so they are starting to show further signs that this market's going to stay under pressure. As I mentioned, I thought we could rally back toward the 10-period moving average. We did that, but then it reversed shortly after that. Most of that had already happened overnight when I was covering the market last night. So we did see a lot of selling. We also saw a slight reversal in the Dow, which put some pressure here. And we're seeing silver and gold are not really connected that tightly, but they are related in their action from day to day. The momentum is growing on the downside, suggesting we could start to go down toward that ultimate low, which would be back at the 1771 level back in November. That's certainly a possibility, but overall, I still believe this is a very broad trading range. That would be the extreme. I mentioned last night that I thought 1808 would hold. That wasn't even a thing. It went right through there. When it broke that, it just accelerated all the way down last night to the 1788 level. So we're seeing some minor follow through overnight. There's no signs of stability, at least not yet. We're likely to see this thing move down and ultimately move toward that low that I mentioned at that 1771 level. Quick look at the weekly. The 1808 level was the S1 number on weekly. We took that out. 1792 was the next number, which was S2, S3, 1775, and then 1760. So S3 would represent the retest of that 1771. I don't see us getting to the STX number, but we're also seeing these weekly PPMs roll over. Gold is starting to look like it could be in trouble, and at least gold is starting to look like it could be in trouble on an intermediate basis, especially if we take out that 1771 and momentum continues to grow. The only positive here in this weekly chart is PPM2 has crossed through the upside of its first derivative, which is hopeful, but it really doesn't tell us much other than we're likely to stay within this weekly grid. So that 1775 is likely to be the extreme for this week. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow at the live stream.